Welcome to 5 and 5 with Miller and Mango, your go-to source for all things finance with a twist of culture infused into every episode. Join your hosts, seasoned financial professional Miller and marketing maverick Mango, as they discuss 5 of the latest market and cultural trends and help you instill common sense into the ever-changing landscape of finance, all within 5 minutes. It's time to dive into the numbers, unravel market mysteries, and discover the strategies that matter. Welcome to 5 and 5 with Miller and Mango.
Hello and welcome back to 5 and 5 with Miller and Mango, where we help make common sense of the latest market and cultural news, all within 5-ish minutes. Today is October 10th, 10/10/23. I'm your host, Mango, and I'm here with my co-host, Miller. Miller, what's going on?
Pullovers and long sleeve shirts and pants are in order. We've gotten quite the cold front here in the Carolinas, and I am here for it. I love it.
I always go the 3 Fs, fall, football, and flannel.
Absolutely.
That's the season we're in.
Love it. Let's get to it. Maybe we can add a 4th F, and that's the 5 and 5 podcast.
Oh, look at that.
Now we have 4 Fs to look after.
That's why we work so well together. Our listeners love us.
What's on the agenda today, Mike?
All right. As always, 5 topics in 5-ish minutes. We'll start with the first one. Morgan Stanley raising pay hurdle for its financial advisors in 2024. As a financial advising firm, as a financial advisor yourself, what does that mean?
Yeah, so quick English translation here. When firms like this raise their pay hurdle, essentially it can be a very complicated calculation, but this is essentially overviewing how advisors are compensated. So for a firm at Morgan Stanley, what do you have to achieve production-wise? In other words, what are you bringing in the door? And then how much are you actually keeping of that amount? So it's a pretty cut and dry, but also pretty complex at the same time. It's black and white is what I mean. So to hear that Morgan Stanley is increasing that hurdle is essentially saying, hey, advisors, you got to do 10% better this year just to break even with where you were from last year. So I think a lot of people are losers in this situation. I think ultimately the industry and clients really lose, right? Advisors are not going to be as dedicated for lower asset oriented people or who have a large balance sheet, which I think is a big downside in our industry. And I think something we do well on the TradeWinds side. We'll work with you no matter what your balance sheet or income statement says. But we've seen a lot of pressure on other groups here in the financial industry, right? Goldman Sachs just sold their wealth management arm off to another business. So this is a really tough calculation to get, but a sign of more stress on the industry.
I guess from the takeaway from a client side is trying to get full transparency if we are working with and figuring out what fees are associated with working with you. So that's what I would say. Make sure you understand what you're buying into when working with firms.
Yeah, and sure you're getting the value outside of it too, right? The advisors here are compensated for dealing with much higher net worth people, for better or for worse. That's generally what the industry shoots for. If you're being underserved at one of these larger groups, making a change may be in your best interest.
Number 2, hot topic that is real. Let's talk really quickly about the Israeli war happening right now and what that means for us from our side, and then economics behind that.
Yeah, unfortunately, it is a hot topic, and at risk of just glossing over the suffering and the human element to it, obviously. We are closely watching the business elements of it, and commodities have really come to the surface, especially oil prices, as that area in the world is pretty rich in reserves. So we've seen oil prices spike temporarily. They've come back down, but they're still at a pretty elevated level, which is not out of the question here from what we've seen commodities behaves. There are periods where supply and demand forces those prices up and periods where they fall off here a bit. So we're closely watching those things, and supply in this case tends to be the most important driver of what that price actually looks like. But curious to get your thoughts as well.
No, I agree. I feel like anytime there is a war, I mean, Ukraine and Russia still going on, there is a negative effect within the markets, and it hits pretty quickly. Don't know how long sustainability it is, but it's interesting from the oil standpoint of what's happening right now to look into.
Yeah, there's not just losers here in the world. Obviously, it's a big strain, but the U.S. dollar looks really strong right now, as a lot of other currencies and native to that area of the world are suffering right now. So, if we're going to have to pick winners again, not to gloss over the human and the suffering element, but if we're going to pick a winner, the U.S. dollar is doing, knock on wood, really well compared to some of the other local currencies that are feeling a lot of that stress.
Okay. So we just talked about fall being the best time, I believe. Fall, flannel, football, fire, and 5 and 5. However, the markets do not agree with that. Traditionally, October has been the worst month statistically over time, right? Is that correct?
Yeah, the September-October transition has tended to be the worst performing on average in the stock market history. So we're talking about many, many, many years of data. And I will have to remind you, Mango, and our listeners, there has to be a worse month.
True.
Right? There, out of the 12, there has to be a best and there has to be a worse.
True.
But, we can't make decisions and wouldn't advise clients on, okay,
no
September
drastic changes.
Exactly.
Yep.
This is so important for you to keep your money invested. We have to keep it compounding. In other words, rolling those gains over year to year to year and really watch it grow.
Is there something to like the beginning of Q4 maybe? Is there a reason why?
Generally, throughout the summer, we see trading volume really flatten. What I mean by volume is transactions and how frequently they're happening. So during the summer, surprise, vacation, school's out, just routines get a little off kilter during the summer. So maybe we can point to that as being a reason. But the fall and winter come right after those periods and come roaring right back. So on average. But stay invested would be my blanket advice for the vast, vast majority of people. Stay invested. Keep your money in.
All right, let's talk about something fun for a change. Halloween. But let's talk about the cost of Halloween. Costumes, decorations all add up quickly. A lot of money is being spent. I feel like this is the Halloween, the trifecta. Halloween, Thanksgiving, Christmas. Mm-hmm. A lot of money gets dumped into the next couple of months.
Right. Yeah, and back to back to back, it seems like, the latter end of the year just goes by in the matter of a couple of weeks is what it feels like. I'm curious to see what you've seen as a father of two young boys who are still participating in the Halloween festivities and costumes. What have you seen?
I mean, it's interesting. I would say from a neighborhood standpoint, the amount of larger than life Halloween like decorations are insane, and they're $200, $300, $400 each.
Wow.
That are brand new. Going up. We personally are not big Halloween decorators. We've decided as a family we're more all in on the Christmas holiday, so decorating for Christmas. But I could see a lot of people spending a lot of money around our neighborhood on just decorating the front lawn. I like more the homemade decorations. One last year was Squid Games, which scared the hell out of me, but it was incredible. But they are just getting a little bigger and bigger, and going to Lowe's or Home Depot, the sections are just expanding within Halloween.
Absolutely. I have to give a quick shout out to my mother who actually handmade our costumes growing up.
There you go.
So there's probably still remnants of them in the attic, in my parents' attic at some point, but she actually made their own.
I think for the boys this year we got a mini Messi, like Lionel Messi, and then maybe a pilot, maybe based off Maverick or Top Gun. I don't know.
Yeah.
Still thinking about it.
Interesting. They have a couple weeks to decide, I guess, what they want to be. And
not like the old days of just putting a sheet on and being a ghost.
That's right. You probably have to be a little bit more creative these days. But the price tag follows that, though, doesn't it?
Very true. Talking about my kids, explain it to me like a fourth grader. A topic that, has been coming up a lot recently within the news and obviously within the office is passive income, right? The rise of the side hustles, Airbnb world. Where can I make money? How can I make money on an ongoing basis that I don't need to touch? What is passive income?
It's a really hot topic right now is what it is. We define types of income in really three different buckets. One, probably the easiest, is your active or your earned income. What is your 9-to-5 job? What do you spend the most amount of your time and effort on? The second is portfolio income. So what are your stocks and bonds and CDs and your other investments paying you? And then the last is your passive income sources. So some of the examples you just mentioned, right? You got real estate, business interest, other ways that we're still participating and earning income from. We just might not be spending hours and hours of your day dedicated towards it. So it's something we hear often, and it's no surprise. You pick up any building wealth book or personal finance book, it's going to advise you to have multiple streams of income.
Yep.
I know you've heard that,
Yep.
and it's a big thing on social media right now too.
Oh, yeah.
This really needs to be carefully planned for, though. As someone who has a rental property, I can speak pretty directly to this. We can't overlook some of the risk and the potential downsides, or at least heavy considerations we really have to keep in mind. One, especially with real estate, it takes, oftentimes, in order for this to be lucrative, a pretty sizable upfront commitment or capital upfront, whether it's a down payment or putting money into a property to renovate it and get it ready for rental. We're talking about a nice lump sum that you'll need upfront for it to be profitable for you long time. Oftentimes, there's an element of borrowing money to buy the house or secure the business interest you may be looking for. That adds risk to your overall portfolio, especially with how expensive money is right now. What I mean by that is interest rates are pretty high from where we've seen over the past couple of years. Right around average is the truth from what we've seen since the 80s, roughly, but high, relatively speaking, when we're just looking at the last handful of years. Just because it's passive investment doesn't mean it's not time consuming.
Yeah.
Mike, I spend quite a bit of time on the road, back and forth to
it's a
check
lot.
in on the house, turn it over, that kind of thing. And the last thing I'll point out is the opportunity cost. Right, this world of finance really revolves around what should I be doing with my next dollar? Should I invest it? Should I buy something? Should I pay off debt? Should I save for kids or college? Whatever the case is, your dollar is in high demand.
Yeah.
So it doesn't make sense for it to go towards a passive income investment. Perhaps they can be lucrative and a really good use of your money, but it shouldn't be something we just blindly walk into without careful planning and consideration. Those would be my thoughts, and I hope I'm explaining that clearly.
You are. Have a plan in place. Don't be reactive. Making sure you know you're getting yourself into, know the pitfalls, know the pros and cons. But yeah, I think it's just, unfortunately, I think the rise of TikTok and some social media channels has made it a lot more of a hot topic than it should be.
Absolutely. Yeah, don't just blindly run out there and buy a duplex or an apartment complex or something and just try to turn it over instantly into money. It's probably going to be a nightmare for you, especially at the beginning.
All right. Well, we did it within 10 minutes. We should rename this 5 and 10 maybe?
5 and 10.
Well, we got to figure out a new name for it. But thanks, everybody, for listening. It's been a joy for Miller and I to get involved on this. As always, please like, subscribe, and comment on Spotify or Apple. We're also going to be making this a ongoing blog as well, which I will push out.
Excellent. That sounds good. Yeah, thanks everyone for joining us, and have a happy Halloween.
Till next time, 5 and 5 with Miller and Mango.
TradeWinds LLC is an investment advisory firm that is registered with the Securities Exchange Commission. Registration does not imply a certain level of skill or training. TradeWinds will not accept trade offers online, and any such request, orders, or instructions that you send will not be accepted and will not be processed. This presentation has been provided for informational purposes only and is not intended as legal, tax, or investment advice or a recommendation of any particular security or strategy. The investment strategy and themes discussed herein may be unsuitable for investors depending on their specific investment objectives and financial situation. Information obtained from third-party sources is believed to be reliable, though its accuracy is not guaranteed. Opinions expressed in this commentary reflect subjective judgments of the author based on conditions at the time of the publication and are subject to change without notice. Past performance is not indicative of future results.